When you hear human resources, what's the first thing that pops into your head? Is it just payroll and paperwork? A cost center? Or is it something more? Is it a strategic hub, a place that's actually growing your company's most valuable assets? Well, that's exactly what we're going to unpack today.
To really get to the heart of this, we have to kind of shift how we think about assets in the first place. On one hand, you've got your physical stuff, machinery, buildings, you name it. And these things, well, they depreciate. They lose value over time. But then you have your human assets, your people. And with the right investment in their skills, their knowledge, their value can actually go up.
So, here's the game plan. First, we're going to tackle that big shift in perspective. Are people a cost or an asset? Then, we'll dive headfirst into the very real, very high-stakes risks of investing in them. After that, we'll look at the hidden danger of doing nothing at all. And finally, we'll wrap up with how the smartest companies balance their HR portfolio to win.
All right, let's jump right into our first section. This is all about making a fundamental shift in our thinking. It's about seeing your people not as an expense on a spreadsheet, but as a powerful, appreciating asset class. So what does this investment perspective really mean? Well, it means you start analyzing the quality, the costs, and the benefits of your people with the same rigor you'd apply to any other huge capital expense. It's all about making strategic bets on training and development to get the best possible return and, ultimately, a huge competitive advantage. Now, when you make these investments, they create two very different kinds of human capital. First, there's firm-specific capital. Think of this as knowledge that only matters inside your company, like knowing how to use your unique internal software. Then you have industry-specific capital. These are skills like coding in Python that are valuable anywhere. And that's the tricky part, right? Because that asset can get up and walk right out the door. And that leads us straight to the biggest challenge for any investor. Just like with stocks or real estate, putting money into human capital, well, it comes with some pretty significant high-stakes risks.
You've heard this question a million times, right? It's the classic line that keeps managers up at night. And it perfectly captures that number one fear about employee development. What if I pour all this time and money into someone, and then they just take all that new value and join the competition? And let's be honest, the dangers are very real. Your best people can get poached. A sudden market shift could make those brand new skills totally irrelevant overnight. And unlike putting money in the bank, there is absolutely no guaranteed return on this investment. And this risk, it's way, way higher in fields like IT and healthcare, where knowledge is literally the name of the game. Okay, but that's only looking at one side of the equation. Let's flip the coin over and talk about something else, the often overlooked but maybe far more dangerous risk of doing nothing at all. And this is the perfect comeback. It just flips the entire dilemma on its head. It points to a much slower, quieter, and honestly scarier risk: the gradual decay of your entire organization's skill set because you were too afraid to invest in the first place. So here's the bottom line. Investing in your people carries the risk of them leaving, but not investing in them, that carries the certainty of having a stagnant, underskilled team that simply can't keep up. So what do you do? How do you build a strategy around this? Well, the goal isn't to somehow avoid risk. That's just impossible. The real goal is to manage it intelligently, like a seasoned portfolio manager who's constantly balancing risk and reward. So let's talk real numbers for a second. How much have the leading companies actually betting on their people? Well, on average, top firms invest about 1% of their total revenue in training. At first, you hear that and you might think, 1%? That doesn't sound like that much.
But hang on, let's reframe that. What happens when you look at that 1% not as a slice of revenue, but as a chunk of the company's total profit? Suddenly, it can represent 10, even 15%. And that changes everything. That's a massive strategic bet. It tells you that the company truly believes its people are the core engine of its profitability. So what drives a company to make that bet? It's definitely not a simple formula. It's this complex mix of things. What are the core values of the leadership? How much risk is the business willing to tolerate? And what are the hard realities of the skills your workforce has right now? And this slide, the HR value chain, shows you exactly why they make that bet. You can literally draw a straight line from individual employee outcomes. We're talking good attitudes, new skills, all the way up the chain to organizational outcomes, like productivity, then to financial outcomes like profit, and finally to market outcomes like the stock price. It's proof that it all starts with your people. So if you're making this huge investment, how do you protect it? The answer has to go way beyond the paycheck. Retention is an active, strategic process. It's about building a culture where people feel safe and valued. It's giving them a real voice in decisions. And maybe most of all, it's proving you're invested in their long-term career, not just the job they do today. You have to build an entire ecosystem where your best assets want to stay. And that really leaves us with one final big question to think about. I want you to take a hard look at your own organization. Is it actively managing and growing the value of its human capital, or is it just tracking its human costs? Because the answer to that question, well, it's going to define your future.